If you've spent any time on social media, you've probably seen real estate influencers make real estate seem like a fast track method to tons of wealth, luxury cars, early retirement, and that just simply isn't true. Real estate investing works because the fundamentals are actually quite simple. So let's break down how it actually works to get you rich and to become wealthy down the road. Okay, so first let's clear up some myths about real estate investing, and that is that most Canadian real estate investors only own about 5 or less properties. And so it's not all of these giant hedge funds who own a ton of properties, or these people who are always trying to scale to $1,000 in 10 years. Most people are sort of mom and pop investors who want a couple of properties that's going to become their retirement fund or give them an edge to help them invest more wisely in their investment portfolio. This is where I think a lot of people get tripped up, because once they start researching real estate, they see all these gurus and influencers who are doing hundreds of deals a year, 50 flips a year, 10 flips a year, whatever. And they think that to get into real estate investing, you have to scale to that amount. And it sort of becomes its own form of trying to keep up with the Joneses, which you don't want to do as a real estate investor. I'm assuming that you're getting into real estate because you want to build wealth and probably look after your financial future. And so even if you do want to build up a huge company and scale and fully dive into real estate, the world's your oyster for that. But don't think that you have to get trapped into fully diving into real estate. You can have a full understanding, or even a good enough understanding to let the fundamentals work for you and still build a financially wealthy portfolio. The second myth is that real estate is not a quick rich scheme, meaning real estate works best when you let it build over time. Those types of people that are selling courses or telling you how to 10x your portfolio overnight, or that it's just a mindset thing, you just have to go find money and raise money, you don't have to do any of that. You can simply build a humble portfolio of, like I said, 5 or less properties and let it work for you over a span of 20, 30 years so that you can delay gratification to have a better financial future than one you do right now. Maybe you want to invest in real estate for your kids, or maybe you want to do it so that by the time you're 55, you don't have to work, you can actually live off some of the cash flow. I will say, I say that with a grain of salt because I don't want you to live off the cash flow now. I think you can live off of it in the future, and we'll cover why later in this video. But real estate fundamentally works best through appreciation, principal pay down, tax benefits, and cash flow. And we have a ton of videos covering how those 4 methods actually make you money in real estate. But I wanted to give more of a practical approach to this video to show how it's very simple. It's not complicated. It is complicated to get started, but the math and the fundamentals are not complicated. Okay, so before we get into a practical example here of how real estate makes you money and actually turns your money into wealth, let's get a couple of facts on the table. The first is that appreciation in Winnipeg over the last 20 years has been right around 6%. It's actually technically a bit higher, but for round numbers, it's 6%. In the same way, right now, the average house is around $400,000. It's a little bit above, but again, just for round numbers, that's what we're going to use for this practical example. So while real estate investing is still possible if you don't have a lot of money, it functions best if you have money to invest, which is true for any investment. You know, when you put money into the stock market, it works better when you have more money to put in. You could buy bigger portions of companies so that when that company's value goes up, you actually gain more value, relatively speaking, than you would if you had bought a smaller amount. But the biggest difference with real estate is the ability to leverage. And we all know this, that you can buy a property with up to 80% leverage, which means if you take $100,000 and put it into a $500,000 property, you wouldn't be able to do that in the stock market. You put $100,000 into the stock market, it's $100K, right? Now, obviously people will say, well, you don't own that $400,000, but over time you do. And so this is where real estate really outperforms stocks. And so to give you an example, remember I said the appreciation rate in Winnipeg is around 6%. If we half that to be conservative at 3%, if you buy this $500,000 property, which is $100K invested, give or take with some closing costs and whatnot, over 25 years at 3%, that's just over $1 million property if you just sit on it and don't do anything at a pretty conservative appreciation rate. Now, to make that same amount in the stock market using that $100,000 over that 25-year span, you would need to have a 10% annual rate of return. Now, over time, that average rate is maybe okay, but as we know, compound interest, right? If you go down a bit, you have to get more for that to work out in your favor. And so that's for real estate. And again, real estate at 3% is low. So if we do 6, it's even way higher. But again, we're being conservative. And the reason I chose 25 years is because that's the amount of time it would take to pay off the mortgage, which, keep in mind, the tenants do for you. And so this is where real estate is really best as a place to park your money, because at one end, yeah, it's not the most passive of investing, but it does allow your money to grow way more fundamentally than it would in the stock market or index funds or buying gold or buying crypto. And this is where I think if you and your spouse or your partner or whatever are both high earners and you can save between 20 to 30K every year, you can buy one of these properties every 4 years. And then after 20 years, you have 5 of these, which if you sit on them long enough, every 4 years after that first initial 21 years, because that's the 25 is how long it takes to pay off, you will then have a property worth, give or take, at least $1 million. To generalize, you got $5 million in a real estate portfolio. When you want to liquidate, you sell one of these properties, you help pay for your kids' education. Maybe you take your family to Hawaii. And this is where I think a lot of real estate experts have failed to help mom and pop investors understand the power of real estate investing, even in small quantities. And again, this is why I think real estate investing is one of the best places to park your money. And one of the best ways I could summarize it is actually through a quote from Warren Buffett, where he said, if you bought all of the farmland in the US, he's American, so quote is US obviously. If you bought all the farmland in the US and offered to sell him 10% of it at a fair, reasonable price, he would buy that. Farmland produces food, it's needed for a civilization to function. In the same way, he said if you bought 100% of the real estate and offered to sell him 10% of that, he would buy that. Right? It produces something. It's a hard asset. People need places to live. You would get rental income. It produces money for you. If you bought 100% of all of the crypto or all of the Bitcoin and offered to sell him 10% of it, he wouldn't pay it. It's not worth anything. It's only worth it to you who owns all the rest of it, right? And so stock investing, well, although very similar, it's sort of in the same vein where if somebody owned all of the companies, yes, they do produce and different companies are different than other ones, but it's not a hard asset. You own a digitalized stock of an actual company, right? If that company goes under, you don't have any control over it. And real estate allows you to bring that control back to you as the owner. And this is why I bash on real estate influencers who tell you to buy a ton of properties when really they're just trying to sell you on a course. And the last thing I want to touch on is the power of real estate continues to grow with you as an investor. So after this 25 to 30 years, if you choose to keep these properties, they actually start to cash flow significantly more over time. And so while I don't recommend living on a cash flow in the beginning, by the end of your investment's lifespan, these properties will be cash flowing a significant amount. These 5 properties that are worth $1 million will probably cash flow at least $10,000 a month, probably more. And so $120,000 is easily enough to live off of. Now, cash flow isn't guaranteed, so that's where if you've had a job for this whole time and if you've been saving up other money, you can choose how to spend your hard-earned invested money that's worked for you on other things that you want to. That family vacation, your kids' school, whatever, the Super Bowl tickets you've always wanted, stuff like that. And that's where real estate at its core works. As you buy it, it goes up in value, and then at the end, it actually works for you as well because it makes more money for you. Those stocks, unless you have dividends, and that's a whole different business, those stocks aren't going to be producing more for you at the end. You have to sell them for them to actually produce money for you. I've compared real estate to stocks a lot, and that's because it sort of seems to be the 2 most popular methods of investing. And this is how real estate investing really unlocks those doors for people to do the things they want, because later on in life, it gives you that not only money freedom, but that time freedom because your money is working for you. If you are interested in learning how real estate can unlock your financial future down the road, let's connect and figure out a path or a plan on your next 25 years of how many properties you'd like to acquire and what that's going to look like down the road for you.